Good day, ladies and gentlemen, and welcome to the Blucora Q2 2012 earnings call. At this time, all participants are on a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. If anyone should require assistance during the conference, please press star then zero on your touch-tone telephone. As a reminder, this conference call is being recorded. I would like to introduce your host for today's conference, Stacey Barra, Senior Director, Investor Relations. Please go ahead.
Good afternoon, and welcome to Blucora's second quarter 2012 earnings conference call. On the call today are Bill Ruckelshaus, President and Chief Executive Officer, and Eric Emmons, Chief Financial Officer. Before we begin, I'd like to remind you that during the course of this call, Blucora representatives will make forward-looking statements, including but not limited to statements regarding Blucora's expectations about its products and services, outlook for the future of our businesses and growth initiatives, and anticipated financial performance for the third quarter 2012. Other statements that refer to our beliefs, plans, expectations, or intentions, which may be made in response to questions, are also forward-looking statements for purposes of the safe harbor provided by the Private Securities Litigation Reform Act. Because these statements pertain to future events, they are subject to various risks and uncertainties, and actual results could differ materially from other current expectations and beliefs. Factors that could cause or contribute to such differences include, but are not limited to, the risks and other factors discussed in Blucora's most recent annual report on Form 10-K on file with the Securities and Exchange Commission. Blucora assumes no obligation to update any forward-looking statement, which speak only as of the date the statement is made. In addition, during this call, our management will discuss GAAP and non-GAAP financial measures. In the press release, which has been posted on our website and filed with the SEC on Form 8-K, we present GAAP and non-GAAP results along with reconciliation tables and the reasons for our presentation of non-GAAP information. We have also provided supplemental financial information on our results in the Investor Relations section of our corporate website at www.blucora.com and filed with the SEC on Form 8-K. Now I'll turn the call over to Bill. Following his comments, Eric will review the second quarter results and third quarter outlook. Then we'll open it up to your questions.
Thank you, Stacey. Good afternoon. We are pleased to report Blucora results for the second quarter 2012. Performance in both our search and tax preparation businesses exceeded our expectations. Total company revenue for the period was $100.9 million. Adjusted EBITDA was $24.5 million. And non-GAAP net income was $21.8 million. Our second quarter results reflect a strong end of the season for TaxAct, sustained momentum in the InfoSpace search business, and highlight the profitability and cash generation of our consolidated company. We are encouraged by the momentum and progress in our operating units, and we believe we are well positioned to take advantage of the secular trends underway in the markets in which we operate. I want to spend a few minutes discussing performance of our search and tax preparation businesses this quarter. Search revenue for the second quarter was up 51% from the prior year, driven by strong growth in our B2B distribution partner network. Distribution revenue is up 70% versus the prior year and 10% sequentially, reflecting search market growth overall, new partner performance, and our ability to capture greater share of individual partner business through focused account management and client engagement. Our team is developing tools and technologies to enhance our monetization solutions for our global partners, and our sales team continues to identify new partnership opportunities to grow our network and expand our footprint. For our tax preparation business, TaxAct, our second quarter performance was strong, with top-line growth of 11% from the prior year. The continued shift to online do-it-yourself tax preparation, combined with the strong execution of the TaxAct team, contributed to better-than-expected season performance. Overall, our formula for building value is intact, and we are executing successfully. We operate good businesses with focused strategies in growing markets. Our cash flow outlook is attractive and provides us the flexibility to invest back into our businesses where there is good return and evaluate acquisitions that make sense. With that, I'll turn the call over to Eric for more details on the financials.
Thanks, Bill, and good afternoon. Today I'll cover our second quarter consolidated performance, segment results, touch on unallocated expenses, and end with our third quarter outlook. Starting with consolidated performance, second quarter 2012 consolidated revenue was $100.9 million, and adjusted EBITDA was $24.5 million. Non-GAAP net income was $21.8 million, or 53 cents per diluted share, and GAAP net income was $9.7 million, or 23 cents per diluted share. Our consolidated results are up significantly on an absolute dollar and percentage growth basis versus second quarter 2011 due to the impact of the Tax Act acquisition, coupled with the continued growth in our search business. On a sequential basis, consolidated results are down as expected, which can be attributed to the seasonality of our Tax Act business, which generates the majority of its revenue and profits during the first 4 months of the calendar year. As a reminder, we completed the Tax Act transaction on January 31st, 2012, so the first quarter reported results only include February and March 2012. Pro forma consolidated results on a trailing 12 months basis, including Tax Act, and ignoring the impacts of purchase accounting and certain non-operating expenses, were revenue of $365.9 million, adjusted EBITDA of $82.6 million, and non-GAAP net income of $70 million, or $1.73 per diluted share. Pro forma levered free cash flow for the same period would have been $75.5 million. These pro forma results highlight the potential of the combined entity's operating performance and cash flow generation. We exited the quarter with cash of $141.9 million, or $3.52 per share, and cash net of debt of $66.9 million. Turning to our segment performance, the search business had a very strong quarter with revenue of $81.8 million, up 51% versus prior year, and up 9% sequentially. Revenue growth continues to be driven by strong performance of our distribution business, which is up 70% versus the second quarter 2011 and up 10% sequentially. A trend we would like to highlight is the better-than-expected sequential growth of our new distribution partners. As a result, our revenue concentration of our top 5 distribution partners decreased from the first quarter to second quarter 2012. This is an encouraging trend, and as we look forward, we expect new partners to provide a catalyst for continued growth. Search segment income was $15.1 million, up 31% from the second quarter 2011, and up 13% versus first quarter 2012, again fueled by distribution growth. Moving to the tax preparation business, second quarter revenue was $19.1 million, and segment income was $12 million. Both revenue and segment income were down sequentially from the first quarter 2012 due to the seasonality in the tax preparation business, as I mentioned earlier on the call. Comparing these results to the second quarter 2011 on a pro forma basis, which excludes the impacts of purchase accounting and certain non-operating expenses, revenue was $19.8 million, up 11%, and segment income was $12.8 million, up 21%. These results reflect Tax Act's strong finish to the tax season. Unallocated corporate expenses for the second quarter were $2.5 million, which is down sequentially, caused in large part by $1.1 million in professional service fees associated with the Tax Act acquisition included in our first quarter results. Now for our outlook. For the third quarter, we expect consolidated revenue to be between $90 and $93 million, adjusted EBITDA between $10.5 and $11.5 million, non-GAAP net income of $8.1 to $9.4 million, or 19 to 23 cents per diluted share, and net income of $500,000 to $1.5 million, or 1 cent to 4 cents per diluted share. For search, we expect revenue to continue its sequential percentage growth rate. We expect segment income sequential percentage growth rate to slow due to continued mix shift toward distribution, coupled with the second quarter benefiting from certain non-recurring costs recorded in the first quarter. For tax preparation, revenue will decrease significantly from the second quarter, and we will record a segment loss as we are now outside the tax season. For the third quarter, we expect revenues to be similar to the same period last year, with the notable exception that revenue will be reduced by $600,000 related to purchase accounting. Segment loss when compared to the same period last year is also impacted by $600,000 for purchase accounting and is expected to be a bit worse due to increases in operating expenses related to assorted growth and integration initiatives. Quarterly historical pro forma operating performance for our tax preparation segment has been included in our second quarter supplemental financial information package. Lastly, although unallocated corporate expenses return to pre-acquisition levels, we expect a modest increase as we ramp our infrastructure needed to support multiple businesses at the corporate level. With that, I'll turn the call over to the operator, and we will take your questions.